Hi there, guys. How are you? How you going there, Paul? Hope you're getting sleep, mate. I hope you're getting some sleep. How are you, Lauren? Oh, every night. That's a tough gig, mate. It's a tough gig. How old is your little one now? I can't remember. So it's not that old, is it? So mine are a little bit older. I've got a 6-year-old now, nearly 7, and nearly a 4-year-old. But they still come in the morning or sometimes during the night and wake you up and jump into bed. So you're getting random kicks during the night. So it doesn't change too much. They come to you instead. 13 months. Oh, congrats, mate. Oh, they're good fun. And how are you, Lauren? I hope you're getting sleep, mate. Sorry, I just thought I'd have a bit of a chat while people are still coming on, looks like. Got myself my coffee. I'm ready to go. Alrighty. Well, without further ado, might as well get into it then. Plenty when not teaching yoga at 6 a.m. God, mate, that's a bit nuts. 6 a.m. Good way to wake up, though, I'm guessing. All right. Welcome to Trade Setup, guys. Looks like the people who are in have been here before, but anyone that's new that watches it later on, welcome. Join us on Twitter on the top left-hand corner, Facebook the top right, and subscribe to us at bottom right-hand corner and YouTube. Alrighty. Overnight, we'll go over today. We'll just obviously talk about what's happening. The market's down at the moment. I think down about 30 on the ASX. Not a big night on the US, but it looks like we're content to head south at the moment. Um, it looks like they're still working through trade. I mean, Trump, like you said, he's picked so many fights. It's going to take a while to actually kick in. I think he's still got Canada at the moment. They're working through NAFTA agreements. I think they've still got, from what I've read, they've still got quite a bit to work through. So that's, it's nothing to celebrate with the market. But the fact that they're in talks and kicking along okay, it seems to be that obviously they both want to come to some sort of agreement. Canadians have a few things on the table that they are not willing to negotiate, and a few things they are. Obviously, their dairy industry, I think they've got a lot of votes from their dairy industry, so there's a lot of pressure internally. They're willing to give up or be lenient on the dairy industry or open it up to the US, which I think could be good. It's still got some work to do, like I said, and I think they're back in talks on tonight, Thursday, so tonight or tomorrow. Um, so yeah, that's going along okay. And then overnight, they said that the US has approached China to get back into negotiations. So they should have had, I think it was public debate or something. That once that ended, they were going to look to put another 200 billion tariffs on China, and potentially follow it up by another 267, which is pretty much everything that US imports billion they're going to tariff. Now I'll just make sure that you're coming through it okay. Just let me know if it's not, guys. I'm just seeing it buffering a bit, which is annoying. Uh, Looks like it's okay. All right. Yeah. So with the US and China, they're still, well, they should have, if they were pretty going to go hard line about it, they would have been imposing the tariffs by now. You'd expect. So it looks like they want to get involved. They want to go to the table, and I think they extended a welcome or whatever you want to call it um, to go to the negotiating table with China. So I'm guessing China would want to do that too, and get it sorted. So what we'll do, minimize that. So that was a bit of a positive news overnight. Although the market's not going to take off until there is some, we've gone through the negotiations before, it's fallen apart. Then they come and, Trump with his Twitter ad, China retaliating, um, with the verbal, I guess you'd say, abuse at each other. So I think the market sort of capped. with that still, obviously, is a bit more positive that things are happening, moving, or starting to at least move in the right direction. And the US obviously is doing quite well with their numbers, with growth, jobs, labor data is quite strong, which means pretty much, I guess, foregone conclusion they're going to have two more rate rises this year. Um, Australia had good numbers out. I don't know if anyone saw that, saw the alert pop up uh, on the app. We had up 44,000, expecting up about 16, and I think the previous was down three, 4.5, or something like that, thousand jobs. So kicking along nicely. Unemployment rate still at 5.3, so that held steady, but they put on a lot more jobs than expected. So that's going to be interesting to see how we go. The Aussie spiked straight off that number 1130, but the markets have been a bit choppy before that. So I was just watching it intraday, a bit choppy. So I think nothing really changed in the global outlook. Europe was positive overnight. On I sort of brushed aside tariffs and things. There's still emerging market issues. Obviously, the US dollar rises. There's going to be pressure. Anyone holding US dollars in debt, the cost of that debt's going to go up, or try to manage that debt, or manage the costs, or finance the debt. It's probably more the term. That's going to get tougher. So an appreciation in the US dollar is not going to be good for emerging markets, especially in the state they're in at the moment, um, with a few of those currencies coming under fire. Uh, Yeah, especially, or obviously, especially with them coming under fire, obviously it's taking more of their own local currency to pay off US debt when it's a lot weaker. So that's still a concern. So there's a lot of headwinds out there still. Obviously, it's showing in our market. We're down 33 at the moment. Let's go and take a look. Let's start off with the ASX. Let's just look at where we are. That's a daily chart actually. We'll go back to the weekly. I mean, again, it's a correction. We've had this before. You can see, back, what was that? The start of the year, start of Feb, the market was sort of doing the same thing, ticking higher, had a bit of a pullback, went to retest the highs, and then just capitulated basically in that week from, what did we get? Highs of 61.21, got down to 57.86. So that's give or take about 350 points. So that was a good little solid drop in a week. We've done less than that last week. You can see by the size of that candle, but similar type of thing. So really just trying to assess now on a weekly basis, are we going to come back? Let me just draw that up. Are we going to find further weakness, or are we going to start to, defend this level? As buyers going to start defending this level, longer term buyers? Obviously, you've got to do with commodities in our market, but even if it comes back down to test support, potentially it's that 6,000 level. That may or may not come in line with this rising support at the moment. But this is weekly trend up, with a bit of heat coming out of the market, which is more than expected. So it's really just dropping down from here to see if this is going to, come down to test 6,000, or we're going to start to hold up here. I'm sort of inclined to believe that it's going to at least come back down to test towards that 6,000, especially if, news comes out, they go into negotiations, they come out, they're both, bull-headed, and there is no negotiations, and Trump jumps back on Twitter and has another rant that's going to send the market south a bit, because it's sort of like a pressure cooker. The pressure's building. Something's got to give. Either the market's going to head south quite hard, or it's going to have a bit of a spike on the back of good data, solid growth, good jobs in the US. It's going to obviously drag us higher. We're doing okay as well by the looks of it, putting on new jobs, with relatively low unemployment, or they're going to walk away, and you're going to get another kickoff potentially in the US dollar. I mean, just think if it doesn't come out, what are the ramifications? You're going to probably get an appreciation in the US dollar. That's going to hurt emerging markets. Going to throw that's sort of one negative into the mix. Then the US are probably going to be obliged to impose those tariffs if they can't come to some sort of terms, or they can't negotiate. Or, like I said, if they're bullheaded and they both go apart, and then obviously the argy-bargy starts again, the market's probably going to give up a bit, I'd say, just because of that negativity around surrounding the market globally. Yeah, like I said, US dollar appreciating to be a bit of a safe haven run into the US dollar. Gold, you would expect to drop off again, do the same old, get sold off, and potentially our market, commodities get hit. A rise in US dollar is going to put pressure on, say, copper, and other commodities, again putting pressure on our market. So that's the way I'm viewing it at the moment. It's still a bit of a stalemate. Until something happens, we're sort of just going to be either gradually edging lower, then bouncing for a few days and edging lower again, and maybe chopping around within a bit of a range, or we're going to find a bit of pressure in our market. Going down to the daily, you can see really just the recent price action. It's that 6,000 mark where we're concerned with. So if we're just breaking it down, the levels to be, oh, it's not what I want to do. The levels to be watching at the moment, you can see we've got really, it's about 61.80 thereabouts, and then this 6100 mark. The market can chop around in there as long as it holds above 61, and it could pretty retest, could wash out and pop back in. But you don't really want it to close below 61. It is extended to the downside. You can see that. And we might just, I mean, it doesn't mean that we can't head south if we are extended to the downside. But like we said, the weekly trend's up. So at the moment, potentially the daily's crossing to become a downtrend. And that's, I sort of judge that by the EMAs or the EMAs when they cross up. So you cross up here, you're up in an uptrend here, and it's a downtrend. So you're really just looking for, as a bit of a signal, potentially we're going into a downtrend on the daily, but then again, that's against a strong, fairly solid uptrend on the weekly chart. So you're going to get those times it's going to be a bit choppy going forward. You can see that when you look at the stocks as well, each individual stocks. A lot of them are really not playing out. I've been whipping through, changing my scanners, just fumbling around with things and just going through chart after chart. And the ones that are setting up, they potentially look okay in the way I like to look at them on the daily. Then the weekly trend is down and has been for a while. You know, it's been, or yeah, they look like they're set up on the daily. Okay, there could be a bit of a run up on this. You look at the weekly, and the weekly is quite stretched. So in a market like we are at the moment, I'm not willing to throw risk at something like that. Yeah, they could work up, they could work out, but again, I'm more than happy just at the moment until we get some sort of direction on this overall market. Um, like I said, if we head south down through here, you'd want to just step out for a while. We're probably heading down to that 6,000 mark. It's not going to take much. It's only 100 points through that. See if it extends down to 6,000, and then start to wait. Well, start to wait. Wait to see if buyers are going to start stepping in, start to support that level, defend that level. It may take a few weeks, so a few days to a week or so, a couple of weeks to play out, if that's the case, which is fine. Or are we just going to chop around here until basically that trend line catches up? By saying that just takes time. So we could do what we've done. Where are we? Excuse me. Where did we do that last time? It's on a weekly chart. Oh, like here, we could do that. Spend a good part of a month just going sideways. We don't know what's going to happen with negotiation. We don't know how that's going to play out. How, he's got a lot on his plate, poor old Trump. A lot of negotiating to do. So it could just play out that it goes sideways, so that grinding lower, ever so slightly lower, like that price action we saw back in the middle of last year. Um, we could get that on a daily basis, just chop around here. And like I was saying, the MAs catch up, so that trend can catch up by just the market going sideways. And then you're sort of got to sit on your hands for a while. But we'll see how it plays out. But I'm still looking for, either would like to see that pop up through 61.80, say, and see if we can pop up there, then I'd be looking for, I mean, there's a lot of things to keep in mind. It all depends on, say we do pop up, we've pressed down. So that's that press down here. We popped up, potentially pulled out. It's a minor lower high. If we build that, say we are 61.25, say, then we pop up. You want to just keep an eye on it, because it just could be a grind higher, and then you start to get some lower highs, and we press down again, and it sort of breaks that trend. You can see what I'm saying? So we could just grind up, build a major lower high below 63.50 on a weekly basis, and have that secondary correction down on the weekly. And that, I guess, is going to depend on what's happening on the news front, on the global news front, emerging markets, trade wars, trade concerns, all that sort of stuff, all that nifty stuff. If I change this, yep. All right. Does it make sense, guys? So I'm really just keeping an eye on those two levels at the moment. I'm happy just to stand aside. I'm not seeing anything set up quite nicely on the dailies. So happy to leave that one just for the moment. Our positions have got a short going against us. That's KGN, and that's actually showing some strength, which I'm a bit miffed about. The weekly doesn't look great. This weekly, you can see that press up, pull back, deeper correction, another lower high, good acceleration down last week. Expecting that to break down. Instead, we got chipped in the same day it rallied up. The next day it was okay. Then today we've seen a fairly strong rally on, was it Kogan? So we'll see if that one can hold up or we can find some more weakness. CDA was, again, it's just hovering around 320, give or take around that 320 mark, just above it the last couple of days. Um, the actual chart's showing strength, it's kicking higher, but it's just no one's really, if you're a new buyer, you're really not willing to buy into it just here because of what's happening globally and what's happening in the overall market because it is slightly extended. You actually slightly extend. Look at the weekly; it's been up since 2016. Just been grinding high. We're potentially getting an extended market up here. So anyone new to throw their risk at it, I think that's what's keeping people out, especially the way the markets are. And TER, which is actually we've taken a partial. Not going to lose on this one, but I would like to see that continue high. It's just been sort of stagnating the last few days. All right, let's get on to. So before we just going to take a look at what's the other charts are saying. Get ready just to put in some stocks, guys, and we'll take a look at them. And I'll just flick through some that I'm looking at as well. I mean, like I said, not much is happening. And I'll just show you what I'm talking about with regards to the weeklies and the dailies, the way they're setting up. All right, let's just take a look at quickly the overall market. DAX, take a look at the weekly. I mean, the weeklies, this is not too bad the way, this is the price action I'm looking at. So you've got, you've got a fairly clear level through just below 12,000. It popped up, pulled back, retested up, failed to get through those highs. Big bang, straight back down. Lower high. So that lower high is in place. We've still got these lower highs, but you can see that the price action, um, this is not a bad thing. It's looking weak, but a lot of the times they look weak and then it can just pop up and just take everyone out on the upside. So you get people load up, are getting a bit caught up with the negativity or the bears getting caught up in the market, and it can just sort of grind lower and maybe wash out this low, then boom, up she goes. It could. So I'm just keeping an eye on that, and it's mainly because you can see this move down here. It pretty much went from resistance to support in 2 weeks. All right, and what we see the first 2 weeks popped down, or a few weeks, then it sort of consolidated, popped up, had a deeper correction down. Okay, didn't quite get down to support. Then we popped up again, come back down. We found some buying support off that low, popped up another lower high, and we just pressed down into it now. So you can see the difference in that price action as opposed to this. Boom. It was, one foul swoop. So that's more negative. At the start of the year, that price action straight down was more negative. Here, it's a bit of a grind. So it's showing you that there's still some bulls out there or some buyers out there that are willing to throw some risk at it. It's jumping around, it's chopping around. They're potentially looking at the longer term picture. I don't think anything's confirmed just yet until we get a higher low, and you'd want to be. Well, let's just say we've worked our way down to support. You'd want to see it hold up, potentially hold up at a higher level, and start to grind its way back up again, and then you might get some acceleration up into new highs. But again, it's all dependent on that story. What's happening globally with trade? So that's the DAX. I think the FTSE's they got their Brexit issues. That's why they've headed south. But again, that weekly chart as a whole, you've got the market pressed up, big washout, big flush out that pushed out at the start of the year, straight back up the highs, wash out the highs, and then we're it's a bit different, but it's similar. It wasn't too weak off those highs. You can see once we got through those highs, it's had a bit of a pullback. Tried to go again, but a very, very wicky market where it's just showing that fight between the bulls and the bears popped up, built a lower high at 78, and then we got a bit of a run on to the downside. But we're not near the lows around 7,000, 6,900. Still looking towards there, or we could be starting to find. You can see the stochastics coming down to that oversold territory, and we're not near that low at 69. We're about what was it 3 to 400 points off that low. So it could be that it's starting to build. This could be a zone where you flick it down to the daily charts just to see if we can start to build here. Dailies are overextended on the downside as well. So look, we'll keep an eye on the FTSE. It potentially is showing that, all right, we might be getting buyers happy to step in here. And that, obviously if they come out with a Brexit deal, that's going to be positive for the FTSE and positive for their currency. But we'll see how that plays out. So that's it. Let's let's get into it. I just want to show you what I was talking about. I'll just see if we can flick through some charts. This is just randomly, really. So we're seeing near map. This is one. Okay, I mean, this is the example before what I was saying. Okay, the trend is up. That's been quite solid. Up, pull back, up, pull back, up, pull back. But you look at this weekly. Is it? This is what I'm seeing a lot of. If they're trending, they've been trending for a while, and they're looking like they're getting a bit stretched. I mean, you can always get caught out by not getting in too. You can lose money by not getting in. So it's just when you're looking at things like this, and you potentially say you're looking at this, it hasn't really set up for me on near map, but so potentially say you get your high lows, you get the inside level, you know where you're going to place your risk. If it breaks out there, we're probably going to head higher to take out the highs. Um, I know where I'm not going to risk too much at it. You just want to be wary that, I mean, one, don't risk too much at it because of where the weekly charts are, and that weekly chart's starting to get a bit ahead of itself. It's been hovering around over extended level for quite a while, most of this year. Um, so as a as a trade, as a potentially strong trade, I'd add a low probability that's going to be a good trade. It doesn't mean you can't get something out of it, a few pips. You might have to be on the ball a bit, but that's the type of charts that just flicking through I'm seeing. If this one's you can see is rolling over, that's a deep correction on the weekly. Um, that's something you don't really want to be in right now anyway. The daily is potentially going to find some support. This is IAG. Uh, the weekly's just broken a couple of levels on the weekly chart. So whether it's going to pop back up, build a lower high in the weekly, and then roll over, go into a deeper correction, don't know. It's not something I want to be throwing some risk at the moment. RWC, actually not too bad. Potentially a pullback zone, nice little zone to buy. I'm not really seeing it set up yet. We've got the MAs crossed. I don't like when it goes from above the MAs to below, and then potentially it could pop up, touch the MAs, and have a deeper correction. Especially, looking at that weekly and what we're seeing the overall market at the moment. You can see that it's looking bearish. It's MYOB. So for me, just flicking through, that's bearish. It's crossed through the MAs. Pretty much it was in a good uptrend. It just took off to the downside. That's Sandfire straight down, and that's obviously coming under pressure with what's going on with China and the US. What else we got? So you can see that there's nothing really. The Medibank is sort of chopping around sideways on the weekly, downtrend on the daily. What's that? Telstra. Telstra is what I'm looking at. Only because it's been in such a serious downtrend. Um, it could be that it's going to pull back, build another high low above 3, maybe at 310, and then start to pop up. Then you've got an inside level through 320, for instance, that you could buy, looking at a push to 340 or above. But again, in context to the weekly, um, you've got to say that weekly, it's still in a downtrend. It's just a pullback at the moment. Nothing has changed. There's still some longer term weakness there. It hasn't changed. If you're going to buy it here, expecting this to extend, you're looking to this on the weekly to get extended without retesting the lows. So it's pretty much calmed down, turn around, bounce. You're expecting it just to turn around and bounce straight off the bat, which the way I'd never try to trade on the back of that sort of structure. I mean, V-shaped sort of recovery where it comes down. It's been heading down for quite a while. Turn around and just straight up for no particular reason. So it is. I mean, if it does set up on the daily, you could potentially throw some risk at it. Uh, See if you can get a few cents, but just be wary that it could be due on the weekly because it's extended to the upside. Could be due just come back down and retest. It might build a major higher low at 275 if we do pull back on the weekly, and then I'll be more confident with the weekly coming off a higher low on the weekly, or potentially a double bottom, or it's retested those lows at say 260 or so down here. I'd be happy potentially to trade a setup like that, like what we've seen in the daily, if it plays out that way. And by that I mean the setup I'm talking about. Let me just close that discard and I'll get it back open, get a clear screen. So what I mean, the setup, so this is sort of the setup, I'm right. Setup on the daily, it's sort of kicked up quite hard. We had a bit of a pullback. Oh, I don't want to do that. Can't see it, can you? Bit of a pullback, and then we're about here, about there. So if I was looking for that daily setup, I'd like it to sort of pull maybe a little minor pullback, hold the high low, and then pop up. Then you can throw some risk at it there. You know, it's just an inside level you can trade off, and then potentially looking for that push up through the highs at 340. So that's the setup I'd be looking for. But it'd be much better if you've got the weekly. So the weekly's been heading south. We've got this pop up here. I'd rather see it off a higher low on the weekly. So this would mean that that daily is going to roll over, and then look to get that set up. If that's, it's just coming off where you've got both the longer term and the shorter term charts in your favor. I hope that makes sense, guys. All right, so that's just a few chipping through a few that I'm not utterly convinced, and a lot of these that they're in that overextended on the weekly too. Stochastics are sitting on sort of the overbought zone. It doesn't mean they can't go, but you still have to bear that in mind because I think it's a low probability setup if you're buying that way. All right, well, let's get into it. So that's just one that I've actually been got my eye on a bit is Dulux. That's not what I wanted to show. Let's just go to Dulux, DLX. It's more the weekly. I think the weekly is showing some promise. Let's go one step back. So it's been pretty much longer term. It's just been grinding higher. It's pressing up. It gets a bit choppy. You can see, well, this move up over a few months, pulls back, sort of touches on the anchor, touches on the highs, pulls back. It tries to go through here with this pop up just here. Can't quite get through. Has a minor deeper correction, but still respect to the longer term anchor. Then starts to push through the highs, pull back through the highs again. Getting a bit choppy lately on the weekly after this good solid run up, but you can see still well and truly holding higher lows on the weekly, and that comes right back to probably end of 2016, start of 2017, holding these higher lows. So potentially, if you're dropping it down on the daily and you're trying to buy it longer term, you might just want for a bit of a pullback somewhere where it's near that support on the weekly, and look for that daily setup where you've just off some daily higher lows. But this one, either way, it's more the weekly. I mean, I wouldn't buy it through on the weekly, buy it through a push through that high because I think you get chipped out, pop you in straight back down to stop you out, or you're going to have really wide risk on it. I'm not willing to put wide risk on anything at this market, in this market the way it is at the moment. The other one I actually do like, I'm debating in my head. This looks like a great setup. This has been Bingo Industries. So it's done what, 4 million today. So you can see since it's pushed up, I'm on a daily chart, I'm not, yep. Since it's pushed up, say middle of last month, had that little run up, had big spike in volume, supporting that acceleration higher. It's sort of kept that volume, and it's looking like it's holding that high. So if we can come back, we'll go back to a week. Actually, that's pretty much all the data. You can see it's just been trending higher. It spent a good part of a few months chopping, going sideways. If it can't go up, it's probably going to just wash out some of the lows. And that's just really, the overall market. If it can't go up, it's got to reset itself. It's got to clean out a few of the buyers and then start to build again. And you can see here we cleaned out, tried to run up, couldn't quite get up to those highs, had a bit of a pullback, tried again. When it can't try one, two times, it tried twice to get to this high back here. Take out that high, it couldn't, so it's had a deeper correction. Just capitulated. It took out those lows. So that's just cleaning out some of these buys that have been holding it since the start of March, say. Clean them back out, then pop straight back up, and then built this high low. So if you bought it through, well, I'll say 275 through that move up there, you would have done great. And that was off a higher low. So after we've cleaned out a few when it couldn't kick on, so that would have been a nice entry. But looking at it now, it's holding this. It's holding the highs where we are at the moment. Let me just go. Let me get that back up. But it's got a few of the problems what I don't quite like to see. So you can see, oh, let me do something again. Let's minimize on this entry. So I just want to focus in on, let's just drill out a bit more on the entry, what we're seeing. Here we go, snapshot, done. So we've got a market. You've got your high low here. That's sort of your trend up at the moment. You know, you're a bit away from the average, and the average at this stage is around 295, and that's the trend, that support. The market can easily get ahead of itself. So we had a big run up, a pullback here, pop up. We built our lower height, had a pullback, but look at this. It really didn't get through those lows. It just tested. It's around that $3, washed it out once, and rejected here on this red candle. Next day, it sort of opened down there, tried to push up, and finished in the red, but it was above that $3 level. Next day, it's open, washed it out, and finished green, quite positive, which it had another green day after that. And you can see these last couple of days too, we've got rejection just in here. So that's, to me, showing a bit of strength in price, and it's hovering around the highs after this move up. So that's probably about a 50% retracement of this move. Probably a touch less than that. Let's just have a bit of a guess. 260 up to around 325, down to $3. Okay, so it's about $1.25. That's not right, is it? Yeah, so it's less than 50%. Sorry, what am I talking about? 25 cents as opposed to 40 cents. So it's more like about a 30 to 40% retracement. So that's quite a good show of strength. And the fact that it's rejecting here, it's rejecting here. For me, I was looking at that entry pretty much through that high, and that you can see everything's sort of lining up. Does that make sense, guys? So that, yeah, as an entry, I don't mind it at all. I think it's worth it. It's just the fact that it's been hovering around that overbought mark for quite a while, and it can keep doing that. But if you go back to the weekly is sort of at that overextended, overbought territory as well. I mean, like I said, it can stay there. It's just in the current environment, I'm finding it a bit tough to throw risk at trades like that, um, especially after it's had a good run. It may just wash out that, was it about 320, I'd say. The high at 318. So say you had a 320 entry, it could either pop you in, turn around and have a deeper correction, retest the lows. Anything could happen, or it could just take off. But for it to take off and really get a solid trade under your belt, don't forget you could be up against it with the headwinds we've got at the moment, the global headwinds at the moment. Imagine if the market topples over and you're sitting in that, you're not going to get much of a chance to get back out. It'll probably just fall with the overall market if we do get a deep correction on global markets. And for it to kick on in this environment, it's got to be a big ask. I think you'd want to see what the news is doing, just check out what the flow of news is. But either way, you can see what I'm saying with a lot of these shares at the moment. They're a bit extended. Even when the ones that look really good, it's just hard in the current environment. If you're in a bull market and you saw something like this, you wouldn't care less. You just buy it on the break of 320 because you know that they could stay overbought for a long time, just continue to trend higher. But the way we are, we could spike up to say even to 330 and come straight back down again. So you might have to just be quite fast on taking a partial or taking some profit. Anyway, that's just one that I thought I'd point out to you. Let's get into it. So we've got EVN. Let's take a look at that. All right. Any questions there, guys? Got anything else you want to take a look at? All right. So a mouthful of coffee there. Sneak on. So Evolution Mining. Look, it's in a downtrend. Pretty much. Let's go back to the weekly. Look, it's the only reason I'd say it's in the zone. I don't. This could just be macro correction. By macro correction, we mean it's just taking out a few levels. So let's draw that up. Right, so you've had a leg up here. This is pretty much your macro correction there. Probably the anchor. You can see the levels. What we're saying, anchors fairly clearly. It's broken through this anchor. I wouldn't say that's a strong one, but nonetheless, it's pretty much, it's only a minor anchor. It's that $2 level. This macro correction has taken that out, and you can see it got ahead of itself. You know, that near vertical move, it spiked from 2 to 3, $2 to $3, and we've just had that sort of corrective action lower. So that's what we're describing as a macro correction. This has started the next leg up. You've got your high low here, chopped around inside this level for a while, then started to build and started to accelerate. You can see this move pretty much was the one we're looking for. Would have been taken some patience, but if you bought, you know, you followed up below these higher lows, you're still held in there, okay? Even if you bought it on that break here, pull back, you're still held into the trade, popped up, you're in positive territory again, bang. Couple of weeks, was it day? That's the weekly chart. Straight back down again, still held your level, and that's say with a stop at 210 to 2, say 2 to 210, just below these lows, still held in there. This pop up, then you got this shallow retracement here, which is kind of handy. And then as soon as you get that green candle, you're probably going to be betting that things are going to start to look up, and you're going to attack the highs at $3, which we did. So the market's pressed on through 3, got to 360, up until, and this is probably a minor anchor around 310 before we just capitulated and fallen straight back again. So at the moment, we're probably just going through that macro corrective phase. So it may take some while to some time to play out. I wouldn't buy it here because nothing is proven itself. You don't know if the macro correction's finishing at 260 or we're going to go bang straight back down and retest down at say 230, 40, 20. You don't know where it's, or just completely fall over. You don't know what's going to happen. Just because it's down here in overextended territory to the downside, or oversold, doesn't mean you just want to jump in and put some risk on the table or buy some stock up. It's not the best reason. You want to drop down your charts to see that this area. So what we'll be looking at is potentially, let's just pull that back, is that this zone in here, well, or thereabouts, this zone in here is going to be, because of what we've got on the stochastics, it's had some fairly heavy selling off 360 down to 260, $1 of selling. You're expecting that to be your macro correction, but we don't know if this zone is going to be the zone where it's going to start to lift from. It's just an expectation, is because of where the potentially the stochastics, and I'm guessing if we draw a nice little trend line, it matches up there. So you can see that anticipation is that it's there, but we haven't been proven yet. And to get proven, you really want to drop it down to the daily chart. If we drop it down to the daily, look, it hasn't proven yet. It's looking tentative. It's looking really tentative around that 260 mark. I wouldn't suggest that there's too many people willing to buy that. It's quite a strong downtrend on the daily too. It's getting a bit, the moves down are getting a bit shallower. By that, I mean, let's just draw that up. You can see that move down is quite strong. A bit of a reaction, and we started to move down, a good little reaction. So we didn't get through this low too far. And now we've got this low, and we actually had a reaction. This reaction back up wasn't far off the high at $3, fell a bit short of that, comes straight back down. So now, if I was going to buy this, I really need to see that hold up above 260. I don't want it to go much further than this. Otherwise, you know, we could press down and we could just grind down. You don't know. Does that make sense here, guys? So you really just want to see, and I want to see that 290 level at least broken. You know, I'd rather see, just draw that up. Actually, let's just draw that up. So the two key levels for me right now is really your 290, and I want to see this held up. So what I'm looking for is that you push down. That's our support there. We've got our resistance about, say, just here. I'm going to see that pop up. We pull back down to that 260 mark. What I'd ideally like to see here is a press up through 290, and then even if the markets extend on the daily, and I'd just like to see a bit of a pullback, because when you just break straight up through a level, there's a good chance that there's going to be some quick profit taking and then just a bit of a pullback. But if you start to build this secondary high low, potentially around 280, 270, that's where you'd find there'd be a bit more interested, a bit more interest in buying, and especially you're coupling that with where we are on the weekly chart in a nice little buy zone. So that's ideally what I'd be looking for, and then start kicking on from there. or it could get choppy like we did in the previous price action from the weekly, but that's what excuse me, that's what I'd be looking for and coming out of this macro correction. But at the moment, nothing's shown just yet. All right, so that's EVN. I hope that makes sense to you, Nisha. If not, sorry. What about next? Yowie. Yeah, so 5G, we're not 5GN not holding that at the moment. Just haven't even got on the watch list. We cancelled that. So Yowie, this is your daily chart. Look, that's looking okay as a daily chart. It's just that it's looking really dead after this sort of move down, boom, straight down to back below 10. I wouldn't be too confident in this just at the moment. And look at the stochastics, the way it's moved off from sort of oversold, it's pressed straight back up to sort of 80% mark, and it's really gone nowhere. So it would be a tough one to trade. You're not going to look for too big a gains on that. But I'd like to see it push up above 10 and hold. And that's where they go from 0.01 increments to 0.05, zero point 0.5, isn't it? So go from 9.8, 9.7, 9.6 to 10, 10 and a half, 11, 11 and a half, and so on. So when it gets above there, I'm a bit more confident that it's not going to get played around that 10 cent mark. So yeah, this on the daily, just draw that up. All right. The good thing is we've got a low here pressed up, and it took out that. It's only minor levels we're talking about at the moment. We had a bit of a pullback, built a higher low, just took out that level on the high, which is around 10. So we're just up against that 10 now. So really, the way this is, if this is going to be a high low, it may take around say a bit of time just to chop around that 9 cent mark, above and below maybe, and then start to lift up again and start to attack these highs around 11. But just by that weekly chart, it doesn't look like it's going to get on too far before potentially we start heading south again and retesting. You don't know what's going to happen, but we'll keep an eye on that. Let me just minimize that. All right, does that make sense there on Vin on Yowie? The daily looks good, but it's just the weekly that I'm not too. I mean, if you're going to try something here with a break up through 11, or you're just buying it here, you know where your stop's going to be. I'll put it at below 8 cents, for instance. So you're throwing percentage-wise, you're probably throwing a bit at it um, with a stop below 8. That's your most recent high low. Otherwise, you buy on the breakout of 11, you put your stop just below 9. But either way, it's still, percentage terms, it's quite big. Excuse me. But if that doesn't kick on very far, you just close it. Just give it a miss. Sorry, guys. Phone got in the background. What's the other one? KTD. All right, so there we go. There's not much data to play with on this. Let's just see if we can go intraday. Intraday on a 30-minute chart. So you can see that probably this is a 30-minute chart because there's not much data on the daily. Let's just go back daily. It's only been since the 18th of July. 18th of July. So it hasn't been going for too long. Ketone, KTD. Have been watching this one intraday, to be honest, because you can see that's pushing up, pulling back, pop up. This was a great little entry here. If you can trade this intraday, good little run up here. Another pullback, pop up, gapped up here, and we've come all the way back down. So this, you don't really want to see this. You want to see more controlled movement up. If you're looking at ketone, ketone dairy. So at the moment, when we gap, as soon as you gap up here, you'd be a bit concerned. This could be the start of a macro correction, which you don't know where it's going to take you. And if you just quickly draw something up there, that's sort of your trend level. Well, look, we're right there. We're right there. So it could have just been a lot of the heat that's gapped up there, squeezed a lot of these buyers out. Whoever bought it on that day, sorry, on that candle on the open yesterday, wasn't it? Or previously is under pressure at the moment. So they want to see this lift. Now, if you pop up from here and start holding a lower high, there's a good chance that this could break if it's a macro correction. If not, again, you're looking for this type of price action. An inside level. So a pop up, pull back, build an inside higher low, and then looking for a break of that inside level. Whoop. like that. So you got break there, risk there, and away you go. Just see if you can lift back up to these highs at 87, or even onto a dollar. But either way, it's at a zone now. It's just really waiting for that entry setup or that price action to give you the entry. So keep an eye on it too. It's well and truly oversold on the 30 minute. Let's just see what it's doing on the daily. Daily, it's sort of overcooked. It might just take some time to play out, but just keep an eye on that. Probably the 30-minute chart if you can. All right, what was the next one? KTD, SEA, horrible. Um, so for me, I was looking at this. It could be one where you just forget about the weekly because it's been the last couple of years of just take that out. You can see it's big for whatever reason sold off 2016, bit of a pop up, pull back, retest those highs. It's the lower high here, started 2017 and really gave up the ghost after that. Took out these lows. You can see was a low at 5.6 cents. Took out the low here, tried to press up. So really that technically that weekly trend is still down. It's just whether we're going to lift. So your key level is up towards a high of just above 10. And what are we at? 7.7, 7.8. So that I'd rather see it on the weekly pop up through that level and then look for a buy entry. Because I want the weekly chart. I don't want to be trying to fight the weekly chart. I'd rather it be on my side. I'd rather be buying something from a daily chart that's in a weekly uptrend, and then just look for that daily entry. If you get that sort of minor macro daily, I'm talking about daily macro correction, get a bit of a pullback, and that's just a correction on the weekly, and then look to buy on the daily with the weekly, heading the same way. You don't want to be trying to fight that longer term because there's a lot of negativity around this chart, around Sundance. Buyers that may have held it since 2016, if they've held it up at 20 cents, they're sitting at just the last couple of years been, even if you bought it with this sort of pop up, you're quite positive, quite bullish. Bulls jumping in, bought it up here, you didn't close out, you've got an entry at around 20 cents, 19 cents, end of 2016, and you're boom, straight back down. And if you don't, one of those traders that don't run risk, then this is what you run the risk of happening. It just sits around 7.5, you're down 50, 60%, 70% on that trade, and it just sits there and does nothing for all this time. And it doesn't mean it's going to come up just because it's starting to edge higher on the daily. It could just be go to the daily. You got this level up, was it 10.8, 11 cents, say, you're working up against, and it could just run out of steam. You don't really want to see, because you've got to take into account the price action, what's happening. So here you've got that big sell-off, okay? Then we started lifting, a pullback. That's about 50% of this move up, pullback, built a higher low, started to lift again. It sort of held a fairly good higher level. Then we popped up. We didn't get too much further than the previous highs and this high as well. So don't forget, before we come all the way back down to the previous, higher low, it has kicked up a bit. It's gone from overbought, so oversold to overbought nearly, and we're right back up at the $8 zone. So we could be, if you're buying on a breakout of 8, it could go to 8.5 and then turn around and come straight back down to 7 or 7.5. It looks like you're going to have a bit of a fight on your hands, and that's potentially because we've got our weekly anchor to the downtrend up here. It's getting a bit ahead of itself. It may have a fair bit of work to do. Um, yeah, but I've had an eye on Sundance because of the daily, but I just don't like it because of the weekly. I just think I'm fighting the weekly, and especially the way the markets are at the moment, you don't want to be fighting something like that. You'd rather be taking prime setups, and at the moment, this is not a prime setup for me. Does that make sense? Ready to pop? Yeah, it could. So you're holding this one, all right? It could pop up through 8, but the question is, because of what's happened recently, is it going to pop up? It looks like it's going to. Is it going to kick on? Can it kick on hard straight up to 10, or are we going to go through 8 and then it's going to just drag in a few more buys and then pull back and have a deep correction? So what it's doing is dragging in a few buys, having a pullback, and it's sort of keeping them in the market, but they're going to be down. So it's just pressuring buyers if that's the case. If it's going to pop up through 8. 5GN, this has been on the radar, but it's off. It's off the radar at the moment. It's probably all the data. We don't really need the weekly. Now, what I liked about this, it's mainly news driven. At the stage we were looking at it, draw that up. Here we go. So this is sort of the price action I was looking at. You had this pop up, gapped up above there. So how much do you put in that? But either way, we were looking at it about here when it started to press up. I think they had some good news. It popped up into that high, and we had an entry. I think it's 62.5. Just looking for a run of that those highs. I think the entry was at 62.5 and never got there. It touched on this previous high on the back of good news. So you would have thought on the back of good news, if everyone was bullish on it, it should have gone straight through it. But instead, it started reacting lower off that level. So you've got to question. It's always going to be back in your mind. We've had some good news. We've got the price action. The structure's pushing up. High lows here, higher low here. But the price is not going with it. It's not showing me what I want to see. Ideally, I want to see this. If it's going to go a strong day, bang straight through that level at 62.5 and take out these highs and finish above there. That's the price action you want to see. Instead, when it pops up and then just holds there and struggles, at that previous high, you don't want to see that, especially after they pop out with some decent news, because it just means that there's maybe just not enough interest in the stock. No one's really watching it. The only people that are watching it are the people that are in it, and they may have bought it up on the back of maybe anticipating the news or maybe having a bit of a heads up. The people that bought it up and then they didn't get the break and they're starting to bail again if they're looking for a short, quick scalp or gain on it. So yeah, we were looking at that. We had as it started to trickle lower again, basically just closed out that alert. So we're not holding this. We didn't get in, and we don't have an alert on it at the moment. Maybe it's just got to take a bit of a deeper correction because we couldn't get through here. Oops, let's just go take a step back. Because we couldn't get through at this level, you had a pullback, popped up, another pullback, higher low, pop up, can't get through, have a deeper correction. So potentially around that 50, 51 support, if we could pop up to 55, come back down and test 51 or 52 and build a minor high low, there we could get a bit of an action to the upside because it's a good sort of a weekly high low too. Does that make sense? And this overall price action, when you get something pull back, that sort of grind lower, that's not bad when it's in context to I've got to draw this better, don't I? So this is your pullback and a pop up. This is your weekly higher low here. Then you get this sort of price action on daily just grinding higher, but it starts to be in an area where it can build a nice weekly higher low, and you're looking for a higher low on the daily as well to get in as an entry. I don't mind seeing this type of price action here. So that grind lower. It's not a show of negativity. It's more just people buying, edging lower and buying it on the way down rather than, and then potentially if you get the high low, you might start to see it accelerate. And if you get that and you got your entry and accelerates high, great. Yeah, so Paul completely agrees, mate. Overall, it seems to be a good time to sit on the sidelines and take a holiday. True, true. um, yeah, plenty of time to catch up on the sleep. So that's pretty much everything, guys. I hope that makes sense. Yeah, like we're just saying there, like the guys said, not a bad time just to sit on the sidelines at the moment. I mean, I'm not concerned about sitting on the sidelines. Sometimes being risk averse can be just not being in the market. It's got nothing to do with stops. It could just be staying out of the market and just waiting for that ASX to show, some better signs, showing signs that it's holding up here potentially. Like we said at the start, holding up above 61, it might chop around for a while. It might just grind sideways. It might correct sideways. That's fine, but you don't want to get caught in buying something here and then you get this bigger pullback to 6,000. So yeah, at the moment, there's negativity around the market. There's nothing wrong with staying out of the market and just keeping out at the moment and letting the market start prove itself again, and then starting to look for your setups. And at the moment too, I'm just not seeing too many good setups. And you never really want to buy. It's okay buying here because you get a prime setup. The market's still grinding higher. It's okay buying here for a prime setup, but even if you've got a prime setup with the market the way it is at the moment, you got to, and it's happened before, when the overall market's grinding south and there's some news headwinds that are causing havoc. When you're buying a prime setup, they just don't go on that hard. You can kick on and then just stop dead because it's just lacking that buying support or that buying power to really kick it on strong. So yeah, just be wary, I guess, at the moment, guys. It's all about risk management, risk aversion. Don't throw too much at the market if you want to play, and just keep an eye on things. All right, we'll call it a day there, guys. Thank you very much for joining me. What are we, Thursday? So have a good weekend. Paul, hope you catch up on some sleep. Yeah, and we'll be back in on Monday at 12:30 again. So have a great weekend, guys. Thanks for joining me, and we'll speak to you soon. Cheers. Bye.